Warren Buffett is one of the wealthiest people in the world, but he is different than basically all the other super ultra wealthy people out there. And that is when you look at, let's say, a Jeff Bezos, you look at an Elon Musk, a Bill Gates, these people, well, they built a company that provided goods and services, and that is how they built their wealth. Well, Warren Buffett, he built a company based on investing in other companies. He is an investor. Today we're going to talk about 3 specific tips that he gives, and fortunately, Warren Buffett is exceptionally open about his investment strategy and the things that he definitely thinks are the most critical things to know about, especially when investing in something like the TSP. So today we're going to talk about how he is planning to invest his money moving forward, as well as 3 main tips that we can apply as federal employees right now. So right now, Warren Buffett and his company Berkshire Hathaway, they invest in lots and lots of things, but Warren Buffett understands very well that when he passes away, he knows that his heirs, his kids, his family, they are not near as competent at investing as he is. And so he is ordering his estate, the person that is going to be managing his money when they pass away, to invest in a very specific way. And this is what he's investing in. First, he's going to be investing 90% of his money, of his fortunes that he leaves behind for his family. He's going to be investing 90% of that into an index fund or ETF that tracks an index such as the S&P 500, which in the TSP is the C fund, 90% of his money. The other 10% of his money, he is going to be investing in short-term government securities. Basically, something like the G fund, where it is short-term, very conservative. Now, there are 3 reasons why he has given over and over that is his plan with his money for his heirs. Number 1, low fees. Low fees is so crucial, especially over a long period of time. And the good news is, as a federal employee within the TSP, there are low fees already built in, where all the options you have within the thrift savings plan have very low fees, which is great. Now, sometimes, especially in retirement, there can be lots of reasons to roll over to an IRA. When you do that, what you want to focus on, or maybe while you're working, you have a Roth IRA or a traditional IRA, or maybe your spouse does, right? You want to make sure you're picking funds that are low fee. Now, number 2, Warren Buffett has said over and over again that you need to diversify. He says, hey, if you're a pro and you're going to be watching this all day long and you're going to try to invest in individual stocks, hey, go for it if you want to try it, right? There's risk there, but you could go for it. But if that's not what you're going to do all day long, every single day, then you need to diversify. You need to get your money in lots of different places. And that is why most of the time, you don't want to be investing in individual stocks. You don't want to be investing in individual companies. You want to be investing in, like I said, index funds, ETFs. And these funds, they invest in hundreds, if not thousands, of different companies. So the money you put in is split up amongst all these different companies. And if one company, or 2 companies, or 3 companies, if they do really poorly, maybe they go out of business, whatever it is, well, that's not a problem, because you have your money split up amongst tons of different companies. The act of diversification is massive. And that is why, especially as you approach retirement, you want to make sure, hey, how much money do I need to be in stocks, in the C fund, in the S fund, and how much of my money do I need to be in some short-term stuff, so that to make sure that for you are going to be okay. Now, because Warren Buffett, he's doing 90% in something like the C fund and then 10% in the G fund, and that works for him and his heirs, and he also has billions of dollars, right? But for you, what makes sense? Often, there's a mixture that makes sense for everyone, and it is a mixture of being more aggressive and a mixture of being more conservative for your short-term money in retirement. So you have to, of course, find that diversification amongst making sure you're not investing too much in a single company, right? That's huge, as well as not investing too much in aggressive funds and not investing too much in short-term funds like the G fund. Now, tip number 3 from Warren Buffett. He says that we should be investing in stocks and for retirement just like we would be buying a business or a farm. He uses a farm as an example all the time because he says, hey, we don't buy or sell a farm whether we think it's going to rain next year. We buy a business, or let's say buy a farm, in how we think it's going to do over 10 years or 20 years, right? We have to take a longer term view because the market could go down tomorrow and very well might. And the market could go down next year, right? So we can't look at it in that short of a time frame. We have to look at it in the course of 10, 20 years, over the course of a career and a retirement. We have to step back and say, okay, when I'm investing, what am I actually doing? Well, I'm actually buying ownership in stocks, which are companies. I'm buying ownership into a company. And short term, maybe someone has a bad year, but long term, that is what we want to focus on. So when there's these little fluctuations, when the market's going to go down, and really the market has done exceptionally well for a long time, right? But there's going to come a day where either it plateaus or it goes down, something where it's not going to be as good as it has been for a little bit, right? And so you have to be prepared for that mentally. And remember, hey, we're buying a farm. We're buying a long-term thing. Stick to your investment strategy, whatever that is, whatever mix that is between being aggressive and being conservative. You want to stick to your plan no matter what. Because the worst thing is selling out when the market is down. And that is when you lose a lot of money and value and peace of mind over time. So those are 3 big tips by Warren Buffett. If you have ever received incredible investment advice, whether it's in the TSP or elsewhere, that has really helped you grow money in your TSP or money in general, right? And be prepared and confident for retirement, please put in the comments below. Or maybe you have bad advice, right? That you've had to unlearn over the years. Put that in the comments below. When we all share, we all get better and learn a little bit every day. So I hope that was helpful. Again, if you're a federal employee, this is the place for you, or if you are looking to retire confident and comfortable, and we talk about all the things that you need to know to get the most out of your benefits, your TSP, your taxes, and everything else in between. So have a great rest of your day. We'll talk soon.